Hello. Hello. Look who's number one. One and only. The number one. Hey, Zelly. Zelly. Zoom. Hold on. Testing. Another stress. Ooh. Oh, I need to. Oh, shoot. Okay. I have to actually drink some coffee. Maybe I put too much sugar in here. Uh-oh. I hope I don't crash. Ugh. Oh no. Ugh. Yummy. All right. I'm trying to separate the chat. Damn. I might be just out of it. Simba of all spoiled. I was about to say all spoiled milk. But I meant to say all spilled milk. Okay, come on now. Come on now. Oh, no. What up, Simba? How you doing? My beautiful people. My beautiful hermano. My beautiful brother. Welcome back. Happy Monday. Monday night. Is it just me or Bitcoin dropping? Let me see. Oh. No, it's going the opposite direction. Oh my god. How's everything? Welcome back everybody. Welcome back to another edition of The Lion's Den with yours truly, Lion of all trades, with all of his peeps, his pride. I'm looking at the 1 minute chart for the first time in I don't know how long. I really don't trade the 1 minute chart at all. But yeah, how was all of your day? I mean, how you doing? How was your day? The queen of the jungle, the queen of the lion's den, the queen of the peeps. Why is your audio cutting more than a Papa Roach fan? Is my how's my mic? Is it acting up for real? Is it really? I did not know that. Papa Roach, Papa Squat. Who? For some reason? Oh wow. Okay. Yeah, let me know how it sounds. Ooh. I gotta lower this a little bit more. So let's see. Trying to figure this out right now. It's Simba being, well, moistly, or all 15 identities that he's gone by on stream. Oh my gosh. So what's been happening? Looks like there has been a lot of stocks. Majority of the market just bloody red. Yeah, we got AMZN, Amazon, just under -1%. AMD down. Abercrombie and Fitch down 5.32%. ARM down 6.09%. Baba's at 83.60 now. But financials seem to still be holding up and closing the green. Yeah, Moisley is a troublemaker. I would just one day would like to see him say something, you know, out of the ordinary and something regular that we've probably never seen him say. So, because CrowdStrike was up. CrowdStrike getting a big boost here today from 259.35 in the low to 270.05 on the high, the day's high. So it looks like CrowdStrike is, or has been, making a comeback ever since that long, deep sell-off that took place around the middle of July because of that breach or malfunction or whatever it is And now, ever since the low of $192, reached a high of 285. Wow. So it looks like it looks like everything is coming back up for CrowdStrike. They probably must have got themselves got their together. Good evening, Kevin. Benjamin says, Lion, look at the ES Mini, big gap up. Oh no, Benjamin, no. A big gap up. Oh, what? What is this? Hold on. What on earth is this all about? Oh, the contracts. Right, today they made a contract switch from contract ESU 2024, which was September 2024, to now ESZ 2024, which is December 2024. So let's take a look at what that means, right? So let's do our little DD together, a little research. So switching continuous futures contracts, so that you can always see when continuous futures contracts are switching, we have added contract switching icons to the chart. These icons represent the switching dates for continuous futures contracts. When clicking on the switch, okay, this is pretty much like tutorial on how to view and what it means and all that stuff. So on the card, you see the following information, which is the date from which the next contract will be active, from the contract, the name of the expiring contract, to the contract, which is the name of the next contract. If you want to see the chart of the contract, which is indicated on the card, just click on the name of the contract and the chart will switch to this symbol. To go back, just use the undo action with the keyboard, Control Z and all that stuff. You can disable or enable the display of contract switching icons on the chart in the chart settings on the events tab. So let's do that real quick and see how let's see what happens. So let's go ahead and click this and then go to September. And this is how it actually looked like. And then if we go back, undo, and we go to the December contracts. Looks like it's nothing, it's no different. What's the difference here? Is there any difference here? What is this? Oh, what? Wait, did I just... I'm confused. Hold on, let's go all the way back. Okay, so this is regular. Okay, and apparently now this is at a high of 5,701. Let's look for more information here. So contract switching icons are currently available on continuous futures contracts on all popular exchanges. The rules used to determine the switching date for continuous futures contracts are described in the following article. Okay. How is the switching date of contracts determined in continuous futures? So the main condition for contracts switching is continuous futures charts is the excess of the daily volume of the next contract over the daily volume of the current futures contract. Okay. Such a decrease and increase in daily volumes indicate that the current contract is losing its relevance compared to the next one. The rule for determining the switching date is set based on the statistical data for the symbol, taking into the account taking into account this condition. For example, a condition for exceeding futures volumes can begin to be fulfilled on average 6 business days before the expiration of the contract, which means that a rule will be set for it to switch contracts 6 business days before the expiration. Similarly, the switching rule is set individually for each continuous future, and this rule is applied throughout its history. Since the rule is based on average values, there may be situations when the continuous future has already switched and the volume of the previous contract is higher than on the new one, and vice versa, when there are still a few days before the switch and the daily volumes on the next contract exceeded the volumes on the current one. And so then it shows you here the example. Okay, so I guess it's based on the volume. And so I guess I went to the new contract and then the volume from the old contract. Okay, I guess that makes sense. And that's what happened. So now we got a gap up here. But even though the SPY futures is at 5,696, SPY here is now topping here at 562.48. So it's still kind of down from there. And it's still in, well, I mean, now we got this scenario where we could either face another surge and heading to new all-time highs, or we are creating a triple top scenario and rejecting from here just in time for the interest rate decision by the Fed on Wednesday, and then seeing this actually just tank the hell out and fulfill that triple top pattern and see some incredible downside potential. But that's just all speculation, of course. So so yeah, that is actually pretty interesting to see from the futures, just as Benjamin just showed, which I've seen before. I just never understood like the whole meaning behind it, and like just why there was a gap up or a gap down after a contract switching. But now I know it's just based off the volume from the previous, and then it just added to the new contract, and boom, there's a gap up. Let's see what you guys are saying. Thank you, Zelly, as always, for reminding everybody to show some love and hit that like button. And yeah, much love to everybody, and good to see everybody here on the live in the Lion's Den with Lion, Johnny, Kevin, Benjamin, Simba, and many others that could be coming by into the stream. Zelly, again, thank you. Thank you to everybody else. If there's any other type of information that you all would like to share, feel free to talk about it. Feel free to share, and we can all learn about what's happening. Just know that the stream it's gonna be short tonight, so I'm thinking maybe another hour and a half, and see how much we can get through, and see what other changes are happening during futures, and also overseas on the other side of the world, Euro, Japan, crypto, let's see. I was gonna just ask you, how was your day? Not bad. It's 2 p.m. It's margin call. We'll definitely gonna hear that phone ring someday around 2:00 p.m. Eastern time, or wherever you guys are located. So yeah, that's I don't know. I mean, who knows if margin calls start coming in before this month is over, with everything that's going on right now. There's a lot of things going on right now. It's just crazy. It's just crazy what we're seeing on the TV, what we're seeing on the markets in general. It's just, oh my goodness, and how everything just aligns with each other and how it affects the markets in every way. Wherever you see the news, whatever's happening, it's somehow correlated. Benjamin with the 2, and hold on. I had to cut copyright, just in case. Benjamin, thank you for showing the love as always. With the 2, Lions Den family, let's go. I love it. I love to hear it. Love to see it. And that is what we represent at the end of the day. So thank you, and just know that you are loved, brother. And thank you for everything that you have done in the community, and showing your vibes, showing the love everywhere you go. Appreciate you. So let's go. Let's talk about it. Let's talk about, if we want to talk about AMC, we can go ahead and talk about AMC. What's the latest and everything like that. You could actually, as a matter of fact, since I'm already on Bitcoin, I just wanted to show you something that I had made the other day. And there was some trend lines that I have made previously, like a long time ago on Bitcoin. So just, mind you that everything is just speculation, not financial advice, and just strictly in our opinion. So if we go take a look at the chart for the daily on Bitcoin, I had this displayed here, and how it seems to been having lower highs, potentially another lower highs, and you could tell every time it hit a specific point in the trend line, it would actually bounce back down, then bounce back up, then here's a second touch, and then drops back down. It's around this point. It's not as accurate, but you pretty much you pretty much can observe, and you can actually imagine like how this is going. And also, mind you, follow what the 200-day period EMA is doing, because even though all of this is happening, this thing is straight out, and all the other EMAs are actually they have been moving a lot more closer and closer to the 200, where now it's crossing right underneath the 200, and the only thing left to see is, and as we actually move in a little bit more, zoom in a little bit more closer, is that now that you have the scenario where we could see a death cross potentially for Bitcoin, as we see the the 48 day period EMA. Probably about to go right underneath the 200 for that bearish cross, and see this come to fruition and start to drop back down and perhaps maybe touch around 51, 52k. This is just a bearish case scenario, and then from there, you know, hit it up again to see if it actually makes another touch to that trend line, and then, you know, it's pretty much like the pattern that I'm observing and I'm speculating. It could change, not financial advice, it could change where if it hits the bounce and then create something like a double triple bottom and then start crawling back up again, that could be the case. Maybe, hold on, because I would have to play this off. You know what, here, let me clone another line here and just move this somewhere around here, maybe. Hold on, let's see. It's like I'm trying to make a grid, you know? So maybe I don't know how these guys do it, for real. Like, some of them are just on point, but all we're doing is just pretty much creating this type of grid and creating a scenario here that might just pull through, you know what I'm saying? So so far we already got the third touch here, and now you see the pullback on the daily, and this daily candle here, which has now 23 hours 50 minutes left and counting to see where this actually closes, going into overnight into tomorrow. Obviously, if this breaks underneath 57.5, then you will see that retest of under 56.5k, and then, you know, if the trend continues to as well, also you will see the MACD turn back around and start to curl back to the downside and diverge, because you got these two light green bars that represent the momentum decreasing, and, you know, and so forth, in my opinion, of course. I just think that if I can speculate on this too as well, I think that for some reason there's just no point in having any use for Bitcoin. And it's not considered a stable coin at all, especially when you're trying to do specific transactions and you're trying to make payments and you're trying to you know, send money to different countries and all that stuff, you know, those, you know, cross-border payments. I mean, you could do that with Bitcoin and stuff like that, but, you know, it's pretty unstable and it changes on a daily basis. Whereas if you know, you got yourself like something else that's gonna have those functionalities, those perks that are going to make those tokens or those coins more useful and more stable and more reliable in order to be able to make those types of transactions or any type of business that has something to do with, you know, whether it's international too. Let's see, on the 4 hour, like on the 4 hour, it has to retest the 200 day here at 58.8, but you can see this is actually now coming right underneath the 200. The 13, the 30, the 48. This thing is on the verge of just turning back down. So we'll just see what happens in the next 2 days. And we'll come back to this. But in my sentiment, that's what I'm
speculating right now.
And then, yeah. What's going on here? Kevin's talking about AMC calls. SQQQ, Kevin. I don't even check them today. I'm not even worried about them. Ooh, that's how confident Kevin is, because what he did, and of course this is what he did. All right, you don't really have to follow, not financial advice, but he bought out his call contracts for AMC further in expiration, and it's the safest thing that you could do at this point, rather than doing it close to expiration. Simba. Oh my goodness. Why did they oh my god. I don't know how they flagged that comment. You're gonna see it in a second, Kevin, on the chat. They flagged your comment. They're haters. But thank you for that. And Simba with the 2 saying, bird pick Eagles or Falcons or squawking these nuts. Oh my goodness. All right, let me just thank you for that. I don't want to bother the bird because it's quiet and I like it that way. Johnny says spice. Maybe I'll get his attention right now.
Honey, Eagles or Falcons? Honey. Eagles or Falcons? Which one? Eagles or Falcons?
I cannot see the bird.
Honey, get your ass up right now.
Sorry. Hold on. Let me give me 1 second, because this bird is not responding. Whoa. It's got Disney. Alright, well. It was eating, so I just didn't want to. Yeah, we disturbed the bird from eating. Chris Wilson. What's up, Chris? Good evening to you. Hopefully you had a wonderful weekend. Busy, but hopefully it was all good. DH in the house. Detroit's own DH. Some people call him DHL because he got them packages to deliver. You know what I'm saying? So that's what I need to do too. I need to pump some iron. For real, I'm about to start finding my balance. I'm about to see if I can sleep a little bit more earlier and then go into the gym early in the morning. And start training again. Pump some iron. Get stronger, I can't be sitting on this chair for too long and having my buttocks go to waist and go flat. You know what I'm saying? You gotta perk them butt cheeks up. All right, hold on. So we're gonna go over spy real quick. First we'll go over spy after the close. And so this is how it looked like in the 5-minute chart. And it looks like we. Oh yeah, actually, let me bring the other. Okay, so let's look at the MACD first for on the 5-minute chart. How would it sound if Lou had your bird? Come here, you little Momo. Oh, I'm gonna eat you. Come here, birdie. I love my birdie. I love you, honey. Come to Lou. Come to Papa. Can you say, hey, birdie? You little hermaphrodite. You little hermaphrodite. Look at all your colors. So on the MACD, on the 5-minute for the spy, you could tell from here that we had reached a peak at this point here, and we had gotten the signal, a bearish signal. This thing had traced out, and as a matter of fact, so let's talk about this. All right, let's talk about this. So from this point, I want to say that this could be a good indicator of a bearish divergence that has been happening for quite some time, and it has been making lower I don't know what you would call it, lower lows. Pretty much that's how it looks like. Even when the spy looks like it would pretty much make new highs every time, it still, I don't know, for some reason it looks like it's still diverging day after day, and it's still moving up to a higher price. How does that make sense? Do you guys know that? Do you guys know why? I'm trying to figure that out. The manager at work used to have a bird with the same name. He flew away and she was yelling up on the roof, "Come back, honey, I love you." Oh my god. And then you know what the bird said to her? "You will never mistreat me again." I hate you. Yeah, this thing doesn't make any sense. But anyway, we'll see from here. At this point, we can see that it peaked out to a high of 563.11, and mind you, we're only like a couple of a couple of birds away, a couple of dollars away from the all-time high, and it seemed like it definitely rejected from that point because it was tested. There must be a heavy resistance heading up there, so it came back down, ended up coming back down here to a low of 50. Why I'm saying 56, $562. At what is this, 550? But we had a low of 559.90. And for some reason, looks like there's no way of telling if this is actually gonna ever come back to the all-time highs. So many articles out there just, you know, posting up all these bullish titles and thinking, oh my god, like SPX is gonna go to 6,000 or SPY is gonna go to 600. When in reality, when you look at it from the longer time frames, there have been so many times where it could have had that opportunity for it to break out, but even at this point, for this candle, at least that traded today, we still have yet to break that last resistance here at 564. And if it starts to drop from now, and I'm talking about futures, if the futures come out to be bearish going into tomorrow, then that is gonna be it. I mean, I feel like that is just gonna be the point where we realize that the SPY isn't going to try out for those all-time highs anymore, and we're gonna come back down. And so I have this thing here, and we're just gonna do something interesting here. I'm gonna do something interesting here. So we're gonna move this bars pattern, and we're just gonna play with it and hope that, let's see, how do we do this? Should we make this smaller? Probably make this a little smaller if we go like that. Huh. Would that make sense? I don't know. But anyways, let's see. Oh, Bob is back. What did you walk into? Yeah, just, you know, the usual. But how's everything with you, Bob? How is what? Lion is meeting with his parole officer? Oh my god. Don't believe what Simba says. The parole officer is not named Honey. No, I'm just chilling here. I'm considering just doing evening streams for now. Because I'm just trying to focus on other things and trying to find a balance. But it seems like evening streams are the way to go for now, and just trying to get a recap of what's happened today and so forth, and you know, see what we can come up with for tomorrow. And everything is good. Everything is good. How's you? How has recovery been for you? And what's going on? What's the progress? Let's see. And as I'm waiting for that response, I can say is for SPY, if there's no way that the SPY can break over 564 and, well, pretty much 563, 564, if we can't break those levels, then that's it for the SPY, in my opinion. We come straight back down, and whatever reaction that the SPY gets from the interest rate decision Wednesday, either way, it's gonna be negative. I just can't. Listen, I could be super biased with the SPY and just be super bearish, and shoot, I could be wrong, but I just
still think that the inevitable is possible. If not, I think it's credible. I think it's greater
than ever, and I think it's gonna happen. So just waiting for these birds to drop. I mean, stocks to drop us. Okay, Kevin. Oh my god. Doing great. I hiked 4 miles into the mountains yesterday. Balance is good, brother. This wolf, your head up. Definitely. That's why, like, I feel like it's better to just like spread the days out. So when I decide I want to stream, so I mean, I'm thinking maybe I can take Roaring Kitty's schedule and just start, just start doing his hours, because when does he ever stream anymore? He just pops out whatever he wants. What was his description, by the way? What it said here. Look, it said a method for hunting stocks and pouncing on investment opportunities. Live streams on Monday, Wednesday, and Friday from 7 to 10 p.m. Eastern Time. So heck, that's a good idea. Might as well. Might as well just take his shift, take over his job. But dude, that's crazy. You already did 4 miles of hiking in the mountains, so your leg has definitely gotten stronger since the last time we talked. So that is amazing to hear. That's definitely amazing progress, and I'm glad that you can be back on your feet and having a good time as well. Um, 50 basis points. A 50 basis point cut is now, I think now the probability of that happening is a 65% versus 25% before, like a week ago. Because I guess there's just things happening that now, and these institutions and whoever is actually worried about something. I don't know what it is. You guys can guess what it is that they're worried about. But they know something is not right and they're uncertain. So they feel like maybe they need to cut interest rates a lot more and fast. Some even said that they want to go ahead and do a 75 basis points cut. So you know what we're going to do? And you know what? As a matter of fact, we'll hold on to that thought, okay? Again, Zelly and everybody else, that is, again, NFA. On the 4-hour chart too as well, look, you got a potential for the MACD to turn back around and start going back down in momentum and diverge from here. And also here too as well, you can see this arch coming back down, which looks like, it could resemble like a head and shoulders from here, and start to come back down and confirm that downside. So that is what I'm gonna get. That's what I'm getting from now. Okay, and you can look at the EMAs, the 13, 30, 48, as it bounced off the 200, crossed over each other, and now it looks like it's wanting to arch back over, and then perhaps follow this and start to come right back down. Who knows? Maybe by the end of the week we get back to 540, or by Monday 540, and if it doesn't, then 570 if bullish. But again, like, how does that make any sense? It just doesn't. At this point it doesn't. So that is what we're all agreeing on right now. And come on now, you already know where we're heading into, and what's 2 months from now. Not even gonna mention it because, you know, people are sensitive nowadays over in YouTube land. I don't want to get cut. So but anyways, that's just my take on the SPY right now. Can we take a quick look? We could take a quick look on Chart Exchange, because I remember Zelly had looked into Chart Exchange before, and for some reason you can be able to see the max pain for the SPY on the options chain. So, non-financial advice alert. And look, we got the non-financial advice emojis now available. So now you can spam non-financial advice emojis all you want. When you got something going on with the charts and with the stock that you're looking at, now we got the WTFs with the lion shocked as hell. And then we got the usual ones, the ones that we already have here, and especially the thank yous, because thank you for everyone, and for, you know, for giving yourselves the recognition that y'all deserve, and for being here, for showing the love. So thank you. You got flagged for saying the P word. I'm pretty sure I would have been flagged for saying the E word. The E word, it starts with E and it ends with shun. So let's see. What are we expecting? Okay, listen, this is not accurate. You already know Friday. Friday's the Friday's options chain. The max pain for some reason was a 552, which Zelly brought to my attention, but SPY closed at 562 Friday. So yeah, they definitely tricked us on that one. Now here's the thing, the the max pain for today was $559 a share. And what's actually interesting is that it did reach a low of $559.90 per share for the SPY, but didn't quite get too deep into 559, and just bounced from there. So that was kind of almost accurate, so it didn't give an idea that it would go down to that point. So for tomorrow, the max pain for the SPY is set for $557 a share. And then for the day of the interest rate decision, we have the max pain for SPY at $551 a share. So if you notice, it's actually going back down. It's dropping. in share price. So yeah, that's what I was gonna. That's what I'm saying. Like it just doesn't quite make sense to me. Like it's not gonna be accurate to the point where it would actually reach the actual max pain, because what we have been seeing in general from the spy is a lot of caca, right? We've seen a lot of caca happen with the spy, where it would like, oh well, it's coming down now, and then all of a sudden we got a huge $2 spike that goes up out of nowhere, and we're like, well, what the hell? Like literally, like, are you kidding me? And then we're in these options for the spy, and we would think that we have it all down packed and we had the foundation and everything, and we're set with the limit, and we know that the pattern is coming to fruition. We got a bear flag, and then all of a sudden it just doesn't fulfill, and then they just pop the living crap out of the candle. Like here, for example, clear example, all right? You already know this was. Let me do it this way. So from my point of view, from my take, we had this huge sell-off that took place. Okay, wait, I need to make this a lot brighter. What is up with this? And maybe I should switch it to a different color. No, no. I'll just keep it white, whatever. So, yeah, pretty much. Maybe I should make it thicker. Alright, that makes sense. So, pretty much we had this huge sell-off that took place at 10:20 in the morning, and then started to then come back up with some huge pops to the upside, and then find a point where it rejected the 200-day EMA, started coming back down. So this was pretty much a freaking a choppy day overall, and some swings. So you're scalping. It was a scalping day for the spy. The entries is just endless here. But when you take a look at it from a technical perspective, you see that there was a potential for this to become a bear flag. And then you had a situation where there was two big 5-minute candles coming to the downside, and the third one was just about to break below that. And then we had this huge, this is what I'm talking about. Then we had this huge ass green candle pop out of nowhere, and then come back from 560.59 to a high of 561.42. So it's like somebody switched the how you call it, flicked the switch, and was like, nope. And then from there we just went on an uptrend. And then of course when you get to after lunch hours, I mean, look, another big pop here. And then where do we end up? A high of 563.11, and then close at 562.84. Crazy. So yeah, that's what I'm talking about. You got situations like this, like you think that you got the pattern all set, and you're confident, and all of a sudden you get to this point, and boom, and then you got stopped out, or you set a limit, or was it a stop loss, and then so that's why in situations like this, like just when it comes to the SPY, in my opinion, I guess 20% scalps, don't even get greedy with it, because it's always gonna play this thing. And So yeah, that's what I think about that. But yeah, as Chris says here, SPY is one of the stocks that ignores the max pain. Not financial advice with the emoji. Let's quickly go to, I don't know if Johnny's still here, but he's been waiting for a little bit. Let's go to SPCE, Virgin Galactic. I haven't really done a TA on Virgin Galactic in a long time, but it looks like there has been an uptrend here. Wow. Oh. Okay. So since Wednesday had bounced back from 580, closed today at 716, up 2.43%. Let's look at this on the daily chart and see how that looks like. And woo! Look at that, huh? I mean, besides the fact that it did have a reverse split 1 for 20 back in June 17th, overall, like the way this thing looks, jeez, like what a rally! What a freaking rally, huh? And if we're talking about here, February 1st of 2021, mind you, that was literally a week after the whole GME and the GME and AMC debacle, and where there were plenty of other stocks afterwards that started running like crazy, as you can see there. Space was one of them, and I believe Hollow was one of them. Maybe Chris, maybe you know. I know you mentioned Plug Power. I think Plug was one of them too as well. I know OCGN was one of them too, and you got a couple of more, probably tons. But let me see something here. If the share price of Space at that date was at $1,256, divide that by 20. Originally, pre-split, the stock was valued at $62.80 a share. So we're talking about 16 here. So technically Virgin Galactic is a 35 cent a share stock. It's a penny stock right now. Technically, I mean, but now that we see Virgin Galactic at these lows, these low lows, it was at a 52-week low of $5.27, and it looks like it did reach at a certain point where it established a bottom and created a double bottom. Seems like it's a little bit higher than the other. So in my opinion, that is a nice pick me up here. It's a nice trend going on here. If you look at the MACD too, you see that there is a bounce that happened around last Monday to Tuesday. So that's not bad at all. You got four very green bars here in the MACD, so it looks like there is another leg up possible. And if you take a look at this indicator here, you see that we had all of this nastiness, right? All this flow of, I don't know what you want to call this, but you could tell once everything is starting to come back in. Now at this point, you got all the flow coming back up, and now everything is turning green. So this is your usual indicator for some more upside and some more action on Virgin Galactic. So if that's the case, then we have a possible test of 750. or 760. We could say 760 around that point, because it does hit the 48-day period EMA, and also you got the 13 and the 30 all curling back up to the point where it has, you know, that potential to cross back over, and crosses over the 48 and then does a bullish cross, and then the stock can just, you know, move up a lot higher from there. That's usually how the news cycle starts, in my opinion. So if you go to the 4 hour, you can see it as well. You had started getting a radius trend here bullish, so this would actually start coming back up. I'll give you a good example. You see all of this glowing blue. That's how it reveals the trend. So once it starts doing this, and you can see all the price action here coming back up. Once you see this is the opposite, and now you see it happening again here. Then you already know from here that trend is going to continue up. So I'd say bullish case scenario, we have between 750 and 760, and if it breaks that and tests the 200-day EMA, I want to say 780 to $8 at the top there for a possible PT before this week is over. Now I'm actually curious, so I'm gonna look at the max pain for Virgin Galactic for this Friday, and it seems like it has reached the max pain of $7. And we had a lot of volume coming into the $7 strike calls and open interest too as well. So 2,300 in open interest and a volume of 1,384. It's probably a lot higher than that now after close. So you could see a little bit of push of gamma too as well. So if we look at the borrow fee, it looks like they did add shares in the middle of the afternoon. There was only 50,000 left, and they added another 200,000 shares to borrow to short. Now we're down to 200,000 with an 8.09% cost of borrow fee. All right. So that's that quick. That's that quick little TA for Virgin Galactic. For Johnny, if he's listening, he's probably driving right now back home. So that was for you, Johnny, if you're listening. So my bullish sentiment and PT overall before this week is over. Hopefully it will be $8, but do take caution and play at your own risk, because it could get volatile. It's one of those stocks. Oy. Speaking of BIG too, yeah, Chris. Well, this, for some reason, this doesn't update the share price and everything because it got delisted. It still shows as it's under NY, the New York Stock Exchange, but let me see if they actually still update the cost of borrow. No, they don't. They don't. And look at that, max pain. It sucks because the max pain apparently for BIG expiring this Friday was $1, and for October 18. For October 18, it was supposed to be $2.50, apparently, supposedly. Tupperware? Really, Simba? No way. Chris. Not Tupperware. Oh, shoot.
Oh my god. Yeah, that when you say that, Simba, yeah, I already know you're talking about the opposite. Because there's no way. There is no way. I know it's TUP is here. Oh my god. No. You gotta be kidding me. Wow. Shocking. That is shocking. Oh my goodness. Wait, what is this? Hold on. Johnny says, honey, I'm home. Glad you can make it back home safely, Johnny. Good to know. See, even a dollar max paying for TUP for this Friday, and for next Friday was 150. 150 October 11, 150 October 18, 150. Incredible. What's happening? So you telling me plug and fuel cell is also following TUP? No way. Looks like we got 40,000 shares available to borrow at 6.37% cost to borrow fee. Let me open up Fintel. Right. That's true. Because it's under the new tanker symbol. So BIGGQ. There we go. Oh. Okay. Looks like we got a little bit of a pick me up here. Some people are trying to save the company here, or let's see. Good night, everybody. I guess this. See you when I see you. Say a word, Johnny. You'll see me soon. You see me soon, Johnny. Much love to you, bro. Ya tú sabes. Se me cuida. You have a great night. Sleep well. We'll talk in the Discord tomorrow. Let's see if it shows. Okay, so this only shows. All right, we're gonna hold on. Hold on. They got no stats. There's no stats everywhere. But it does show that there's 500,000 short shares available as of 7 hours ago. And the cost to borrow for tomorrow for BIGGQ is 22.26%. So it's decently high. TP in the house, say word. Say word. How you doing, fam? What's going on, Torch Man? How you feeling, man? How was your weekend? It's good to see everybody out here, man. Hey, look, it even let me. Oh, wow. Oh, wow. You see that? YouTube is bugging out. But also, I definitely need a new computer because this is so slow. This is so slow right now. TP! Mr. Torchman. Look at the action on Tupperware. Let's go ahead and look at BIGGQ. Wait. Oh, I gotta add the ticker because I removed the original one. There we go. All right, let's see. Let's look at the situation here. Let's add these. Now, I've seen this scenario before. If I'm not mistaken, I think this is the same thing that happened with, I don't know if this happened to Rite Aid. It took a big gap down, and then all of a sudden it started to, like, you know, establish a bottom from here. I really think, let's see. Ooh. Wait, hold on. Chris, what was your average again? I'm sorry, was it like 45 cents? Or 27 cents? It's been a minute. What a boring day in the market. Yeah, the SPY was just choppy. It was up and down, up and down. You could have scalped it. Calls, puts, and all that. Copped a good 10-20% each way. That was the market. But majority of the market was like red. So let me see. Where did I go and see the heat map? Hold on. 46 cents. And that's just back here. Like, it's just literally like up here. It's not even that. It's not even that far away. It's literally right there. So from what this is looking like, then you got this gap up here where it could try to fill this back up if a lot of investors is considering getting into these low prices. Of course, it's in the OTC, so you can't really trade it in the big board. You can't trade it on Webull. You can't trade it on Robin. You only got to trade it only if OTC is available. Not financial advice, of course. I'm not telling you to buy or sell or any of that stuff. But if you were curious and if you wanted to know and wonder why can't I, why can't I trade this? You know what I'm saying? Then that's where you go to. Now, if it comes to you wanting to just go in there for another quick scalp opportunity, there could be a possibility. There could be a possibility of, some big buys just coming in for that opportunity to try to push this up. And mind you, since it's on the OTC, and this thing goes crazy, not to say that would be the scenario, but what if a lot of money just started piling back into big lots, and we see a surge that you didn't think was possible, and this thing just pops right back over to 40, 50, 70 cents. I've seen OTC stocks do it. But depending on the condition and depending on what the company is going through, that is also something that is uncertain and very, very risky. So that's why you have to play at your own risk when it comes to OTC stocks, because it's not your usual, stock in the big boards like NASDAQ or the stock exchange. What do we have here? Let's look quickly. And just look at Big Lots news. And we'll see what's going on right now. Right, so we already have a lot of articles stating closures. Right, you got Austin, Texas. Well, Texas, you know, with 344 stores. Oh, come on. Ugh. Let's see. Big Lots operated nearly 1,400 stores at the start of 2024. Stop it. Oh my god. Whatever. One Big Lots in San Antonio to close amid bankruptcy. So by November 24th, this Big Lots in Austin, Texas is gonna close down. Son of a F. Cincinnati, Ohio, Colorado Springs, New Jersey. That's so many news. Let me see. Let me go to stock. Oh wow. Okay, so here's some key points here. So you already know it filed for Chapter 11 bankruptcy this week and is planning to close hundreds of stores. Private equity firm Nexus Capital Management plans to acquire the retailer. What? Hold on. Private equity firm Nexus Capital Management plans to acquire Big Lots for an undisclosed amount after it emerges from bankruptcy. The retail. Oh my god!
Stop it!
After it emerges from bankruptcy, the retailer said on Monday. Nexus already owns several consumer brands, including the Dollar Shave Club and shoe brand. Oh my gosh. Big Lots cited high interest rates and inflation among the factors that had held back its sales in a statement announcing the Chapter 11 filing. Oh, man. So, Nexus, let's see. Nexus, you know, what are some of the... Say word. So Nexus Capital Management has a diverse portfolio spanning various industries. Some of their major holdings include Dollar Shave Club, which was acquired in 2023, FTD, acquired in 2019, which is a leading floral products and services provider. Lamps Plus invested in 2022, which is the largest specialty lighting retailer. Oh, moly. Math Beauty invested in 2023. A global personal care company behind brands like Mark Anthony and Cake Beauty. HDT Global, which was acquired in 2021 by a leading manufacturer of military infrastructure solutions. Interesting. Natural Balance, acquired in 2021, which is a premium pet food company focused on high quality formulations. I'm just speculating here. Not financial advice. Okay, so here is the possibilities. Several factors that could impact the stock. Alright. You either have, as a result of them acquiring Big Lots, one is delisting. So if the acquisition leads to Big Lots becoming a private company, its stock will likely be delisted from public exchanges. In this scenario, current shareholders would receive a payout based on the acquisition terms, which could either be at a premium or discount to the stock's current trading price. You'll get short-term volatility, so during the acquisition process, Big Lots stock may experience volatility, as speculation around the deal's final terms could drive fluctuations in price. If Nexus Capital bids at a higher price than the current market value, the stock could see a short-term rally. Operational restructuring. So Nexus has a history of restructuring and turning around struggling companies, as seen in its involvement with other consumer brands. And if this deal includes operational improvements and cost cutting, there could be a positive sentiment for the stock initially. However, these changes might take time to manifest, and the market could react to any uncertainties. And for debt implications, so since Nexus also engages in opportunistic credit investments, any debt restructuring tied to Big Lots financials could impact the stock if it's not fully privatized. This might lead to concerns over leverage and future profitability. So overall, the future of Big Lots stock largely depends on whether it remains a publicly traded entity and how Nexus executes its turnaround strategy. Very interesting there. That is very interesting. Of course, we gotta be nice to ChatGPT. That's awesome. So, this is 4 days ago. Big Lots at this stage, company's reorganization plans do not alleviate substantial doubt about company's ability to continue as going concern. There was something else that I was reading though. But since we already got the information here, who knows what could happen? So I'm gonna continue to keep an eye on Big Lots, see what happens. Then you said plug and fuel cell are going the same way, which is crazy.
it does look like it's been holding up right here since last Tuesday, staying above 190. If you look at the daily chart for plug power, you see it as well that it's trading just above the 13-day period EMA from that low of 188 to a high of $2 exactly. And we got some nice convergence here on the MACD for the daily, so this could be a good turnaround for sure, and maybe some more upside potential. Maybe seeing this try to come back over to 210, 215 around that range. If there's anything about plug, let's see. Your plug power's short interest is at 249,772,087 shares with a short interest ratio of 8.11 days to cover. Got a short interest percentage flow of 30.50%. Dang. And look, just updated 9 minutes ago. Now we came from 90,000 shares, short shares available, to 75,000. So shares are dropping. And the cost to borrow is maintaining at around 10 to 11%. So it's actually it's higher than what it was last week. So we'll definitely keep an eye on plug for sure. Fuel cell. So wait, Chris, are you still here? Give me a heads up.
Oh my god. Bird is annoying.
Oh boy. Let me see. Is As of now, Fuel Cell is not currently heading towards bankruptcy, but it's facing significant financial challenges that raise concerns about its future. So here's some key factors to consider. Revenue struggles, debt load, stock performance, competitive landscape, recent financing, and cost cutting. While fuel cell energy isn't in imminent danger of bankruptcy, its financial situation does warrant close monitoring. If the company can't generate stronger revenue or manage its debt more effectively, it could face deeper financial difficulties. Not financial advice. But even fuel cell looks like it has been trying to turn around too as well, and it has been trading above the 13 and now over the 30 day period EMA. So I would think that even as for fuel cell, just like plug, they're both pretty much headed in that same direction, if you actually can tell. Just waiting to see if that radius trend starts to turn back around and start to see some upside. But the real test right now is if it can actually make it over 50 cents. For plug, again, it's from 2 to 215, around that range. But if it actually, and if you see this here, because for some reason I just noticed this now, there have been many points where fuel cell, why does this look, fuel cell has been pretty much rejecting from below the 48-day EMA once, twice, and there could be a potential for a third time here if that's the bearish case scenario. If that's the bearish case scenario indeed, because you can see here we've had some bear wicks where there was attempts of breaking over that 30-day period EMA, and it will come right back down right below $2 as a major resistance level, in my opinion. And if it doesn't make it over $2, then the bearish case scenario is that it would start to pull back from here. And literally this would be the third official touch, rejecting off the 30 EMA, just like it did previously here and here and here. But if this actually continues to build up from here, from where the MACD is showing, then the bullish case scenario could play out, and it will actually start to continue back moving up. Just put that like that, and same thing goes on for this indicator. If it starts to flow back in, then we can see this scenario play out, and just like back here, back in July, and what happened at this point, July 16, we had that big run up here where this had came back from 221 and reached as high as 334 before it actually rejected and started pulling back from here and gapped down like crazy. So let's just do this. Let's see, hold on. Let's just do this for now. Alright, so that's 140 to 160 around that range. $2 to 220 if bullish. Feel free to take your time here if you want to kind of just like take a snap. Okay. Let me pin this message. Plug is the play right now. Yes, F the news or FUD. Cover your shorts. Plain and simple. Chris said it best. 50-cent calls on fuel cell. If it plays out, they made it easy for me. They made it easy for me and for cheap. Not financial advice. That's what I'm talking about. And speaking of those calls too, I actually looked into them too back then. Yeah, and then as you can see here, it had definitely a huge amount of open interest at today's close, with almost 10,000 in open interest and 1,667 in volume. Looks like the open interest for the dollar calls is growing too as well, but there's no volume because I think they're not really certain that if this can actually rip to $1. But if you want to be realistic, of course, here's that opportunity as well. And, for the possibility of these calls here for the October 18 options chain to actually move and print. You got just as much open interest as the September 20th with 8,734 with a volume 645. Got good delta so far. The gamma is at 230. Let me ask a question real quick. What does it signify for a stock? Here's a little lesson here. So take a look at this. Gotcha. Give me 1 second. Let's read this quick here. So, again, not financial advice. This is just speculation. We're just having a conversation with ChatGPT, and that is all it is. So, please take it as such. Take it with a grain of salt. But we're just observing. We're just doing our research and finding out more about this, because this is quite interesting how these 50 cent calls for October 18 has a very high value of gamma at 230. So what does that signify? Let's go here and have a look. It says here, a stock having a gamma of 2.30 signifies a strong sensitivity of its delta. And mind you, the delta is at 51 at the time of closing, 0.51. So that's a good number too as well. So so that means the rate of change of an options price relative to the stock price. So a stock having a gamma of 2.30 signifies a strong sensitivity of its delta to changes in the stock's price. So gamma is a second order derivative that measures how much the delta of an option changes when the stock price changes by $1. So here's what it means in practical terms. Thank you, ChatGPT. High gamma. A gamma of 2.30 is relatively high, meaning that the delta will change rapidly as the stock price moves. If you hold an option on the stock, your delta, which tells you how sensitive your option's price is to changes in the stock price, can shift dramatically with small movements in the underlying stock price. Number 2, you got volatility and risk. So high gamma implies that the option is in a sensitive period, often near the money and close to expiration. Traders must manage positions more actively since changes in the underlying stock can significantly alter the hedge ratio. Delta hedging? Is that what it says? Is that what that guy usually says? Delta hedging? A large move in the stock can cause an option's delta to increase or decrease quickly, leading to high volatility in the option's price. And number 3, potential for larger gains or losses. So if you're trading options with a high gamma, the potential for profit or loss is magnified as small price moves in the underlying stock can cause significant changes in the option's value. All right, so in short, a gamma of 2.30 indicates that the option is in a region where it is highly sensitive to changes in the stock price, and traders should be prepared for rapid shifts in the option's behavior. So I want to say, I guess, my guess, the spread on the bid and the ask too as well, I think would really move in a certain way. There had been situations like this where you would see that the value of the options contract, whatever you're holding, would be high. It would, like, you would be so much in profit, but then when you look at the bid when you're trying to sell it, for example, like, okay, let's say if fuel cell gets to like 80 cents tomorrow and these contracts are up crazy, and then you see the ask at, like, I don't know, let's say $2 per contract, that's $200 each, but then the bid is at like 0.40, and it's like, in order for you to sell it, you got to settle out the bid. It's like, wow. So I think that's what maybe it might mean in terms of rapid changes or movements like that. And how, depending on how fast the share price moves too as well. I think that's one thing in my opinion that causes the options to move the way it does in terms of high gamma. And it kind of sucks, honestly. So it's like, you'd rather just have a contract that does not have as much. You want to have a balance, and then at the same time you want to have a spread that is not too far apart from each other, especially depending on the way that the stock is moving, because then it's like you have to like really like figure out like what bid makes sense, and if it's actually going to reach to that bid higher than what it is, then you're trying not to sell that. Because if the ask is at like what, 200 a contract, and the bid is at 80, and it's still moving up, I would have to just move the bid a little bit higher. But then again, not financial advice. So thank ChatGPT for that. But by all means, play at your own risk. Let's see. This is interesting too. The short interest ratio for fuel cell is just at par with plug at 7.96 days to cover, with a short interest percentage flow of 23.40. And then here you have, as of 9 hours ago, with only 850,000 short shares available to borrow. Looks like fuel cell's cost to borrow fee actually went up. Well, it's gonna be officially up tomorrow from 18.86 to a max of 23.68. So yeah, a little higher than before. Damn, Chris, you got me tempted now. I'm tempted. Oh no. So tempted. We'll see what happens though, for sure. So yeah, we'll just be mindful of what happens with fuel cell here. Change this to hold on.
As long as you're in profit is, hold on. My thinking with options, hit my percent and sell. Hit your 20, hit your 30. Set that limit. Let it fill. Run with the bag and never look back. For real. Don't miss the train, brother. Nothing's wrong with a small position. No, you're right. You're absolutely right with that. And especially at a price like that for the October 18s, not complaining. That's a good chunk of contracts if you think about it. And you know, I could even imagine what it would be like just getting dollar contracts, but nah. It's better to just keep it closer to the money, because then the contracts will move a lot easier that way, you know. So definitely take a look at that for sure. Thank you for sharing, by the way, too, as well. So definitely keep that in mind. Okay, so we went to can't even talk. So here's something interesting that I just caught. I haven't seen Craig, but Craig had been playing. Wow, you know what? That is insane. Clove is looking crazy right now. What a setup on the daily. Look at this. Oh my goodness. And this was at a low of 60 cents back at around April. This thing reached a high of 382 August 22nd. This is a sick setup. Very healthy in my opinion, just the way this is trending. Look at this. This is ready for like another push. Honestly, look, if you look a little closer, nice rebound here on the 13, then following the 30 and the 48. This could definitely easily retest 350 and break over for some more. Wow, let me look at the short interest on Clove right now. Wow. See, 20,092,692 shares with a short interest ratio of 3.66 days to cover. Only short interest percentage of the float 5.10%, which is They did not update this at all. And the cost to borrow is only 0.30%, so that's not really much of a biggie. But give me 1 second. That is interesting. I know Craig has been talking about Clove for some time, and he's been really, like, his sentiment has been really bullish. Really bullish. Look at this. Really? Max pain at 250? Yeah, that's way over that. 250. October 18. 350 for the October 18 options chain. Cost to borrow. Oh shoot, so it's 10 million shares. They're gonna have that a little bit suppressed. Yeah, they really are looking for the big players for sure. Clove looks like one of them too as well, for sure. And these other tickers that we've mentioned earlier. And talking about Mr. Prez, which reminds me, and this is the last ticker that I'm gonna go over.
before getting off the stream, because I did say I was gonna make this a short stream and everybody can, you know, relax and take a rest and be refreshed for tomorrow. I'm gonna keep doing that, and I'm just gonna like make this, you know, stream a bit more short and sweet, not too crazy, you know, just to keep on tabs with everything and to make sure that we are good. Simba is saying Trump endorsed TUP as a wig holder of choice. Okay, and then it's just big players to need more money is made on the smaller players if you can find it. Yeah, exactly. So exactly, you know, smaller players, you know, smaller market caps, shares float, tiny as hell. I'm pretty sure that, you know, if with a certain amount of people, with a certain amount of money, they can actually move that stock in ways that, you know, that we think that's possible, then yeah, you can definitely make something out of it. Native gamer here. Sup guys, how we do today? Just to give you a brief on that, it's been pretty choppy. I know others are in different plays. We're you know, in our usual plays, which hasn't really done much at all. It's still suppressed, and still waiting for something to happen. But for now, we're just waiting on the interest rate decision this Wednesday, and we'll try to figure out from there. But yeah, good to see you here, Native Gamer. But unfortunately, did come at a later time, as I'm about to almost end the stream, because I gotta take care of some things, and I'm trying to make the streams a bit more shorter, for sure. But you know, as long as, you know, you get something out from this, and you can always come back and we'll even put back the timestamps too as well, in case. So just so if in case you missed the stream, then we'll add the timestamps, so we'll add the chapters to make it more accessible and easier to track any tickers that you're looking at. Let's see, we can just skim through a few more, for sure. We can skim through a few more just to be, you know, just to see. All right, no worries, bro. I just hope that everything is good with you, Native. And how was your day overall? Like, what did you trade? Let's see. Look, we got a little. That's a movement going up. Let's see. All right, so if you can see here, let's see. We might see the VIX turn back around. All right, so look out for the VIX on the 4-hour. The MACD, it's really close to perhaps hitting a cross, where it's going to converge, start heading back up, and then we probably see the VIX spike up back over to the 200-day EMA at 1750 and above. So we would have to look over those levels. You already know once the VIX starts to spike up and come back over, then you already know the market is turning back down. So just look out for that. You know? As for quickly, so I'm just skimming through the list to see if there's any changes. Oh, Mullen. Oh gosh. Yeah. By the way, Mullen is suspended right now because they're about to go through the reverse stock split. Officially, one one for 100 reverse stock split tomorrow morning. Ugh. Can you believe that, guys? Oh no. Signal, signal, signal. Come back, come back. No. Mullen, I don't even know anymore. Close at 12 cents. So you already know once that happens. Once that happens, that means that means that Mullen is gonna be at $12. At $12 a share after this reverse split gets implemented early tomorrow morning. You know, you heard. Da 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 da. Fishy, 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 fishy. Do 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 do. What up, fam? Chris Wilson says, "Oh, wait." Native says was too busy at work to do anything. I feel you, man. You might as well save your BP for the goods, for the big plays. You feel me? Chris Wilson says big players meaning big stocks, small meaning small stocks. It is time for the little guy. I'm gonna hit you the buttons. For real. I'd be surprised if BIG becomes that little guy that beats the big guy. You know what I'm saying? Zelly, remember to like and subscribe. Zelly, thank you. Damn it, man. But yeah, Fishy, what's up with you, man? How was the weekend? How was your trading experience today? How's the fam? How's everything? Let me know. Again, I can't really. Oh, thank you, brother. I can't stay on for too long. But again, if you want to catch the rest of the stream, if you want to go back, we're gonna add some timestamps. We're gonna add some chapters. So Fishy, if anything, if you missed out, of course, I'm pretty much at the end of the stream, but we'll add the chapters, and then if you want to go back and revisit, you're gonna see the tickers that we discussed on the stream. So. Yeah. NFA. Thank you, Native. Wait, you're talking about the jam that's playing right now, or are you talking about the one before that? Mullen, poor Mullen, poor Mullen. Mullen. Zelly, ahora. Ven aquí, ahora. Kula. Oh, okay, yeah. Damn, what was that? I don't know why I called it Ambient Tribe. I couldn't have an exact. I couldn't have an exact title for it, so I just called it Ambient Tribe. Damn. Let's see. GNS 1029. Finger. Surprisingly, Finger has been actually coming back up too as well. Closed $10.70%. EXK are silver mining stocks. Looks like it's building up pretty nicely here with a nice pennant. If silver remains strong and continues to push up past $31 an ounce, then you already know this stock is pretty much running with silver, so this could definitely surge with silver. Non-financial advice. We do see here SPY futures right now. SPY futures is still looking weak even after the gap up here because of the contract switching. The contracts switching to the new contracts for December. Still coming down, so you gotta keep an eye on that. The dollar index I was going over before and showing y'all that the dollar index has been declining. The value of the dollar, in my opinion, is coming back down. It has been coming down for quite some time since the end of September of 2022 when it was at a high of 114. Now it's at 170. And now we're facing the dollar index we're looking at is a bear flag that came to fruition here, and either it's gonna stay within and start building that flagpole back down, and shoot, who knows if we fall right below 100. Zelly is going now for real. Thank you as always, Zelly. I appreciate you, everything. And oh my god, so you already know, much love to you, big hugs, and be safe out there. Be safe out there, okay? So well, we'll see. Actually, you know what? I'll stay for another 10 minutes. How about that? What happens? What could happen to the market in general if the the US dollar index falls below 100? Let's see what happens. Remember, we talked about this before last week about the dollar index falling. So here we go. We already know that the gold has reached a new all-time high. So let's just go to that right now. In the meantime, while ChatGPT is generating some answers for us, here we got ourselves a rejection hard time here. It's still coming down. So, all right, Kevin, it's 10 over here. So that means it's time for you to go to bed and say good night, my friend. So, Kevin, good to see you as always. And be safe. As always, have a great shift at work. Have a good trading day too as well. Be careful. And if anything, you could always come back to the stream if you missed the rest. But I mean, I will be ending the stream shortly too as well. We're just gonna cover this and seeing the dollar index actually coming back down from here. This is crazy. So we're gonna read up more about this and see what it says, and then after that, then a couple of other things, and then we'll end the stream. So yeah. So a good night to you, bro. Appreciate you. Much love to you. And yeah, man, we'll talk soon. And on the Discord too as well. So if the US dollar index falls below 100, it could signal broader economic implications for both US and global markets. And here's what might happen. Of course, just speculating. Impact on US equities. So we got export-driven companies benefit. So a weaker dollar makes US goods and services cheaper for foreign buyers from foreign countries, boosting demand for US exports. Companies with a large international presence, like tech firms and industrials, could see increased sales and profits, potentially pushing their stock prices higher for those countries. And import cost rises. So companies that rely on importing raw materials or products may face higher costs, which could squeeze profit margins unless they can pass the costs on to consumers. This would particularly affect sectors like retail and manufacturing. Commodities prices rise. So gold and oil. So commodities like gold, like I mentioned before, and as wow, look at that big, oh boy, okay. And as we can see, oil is trying to trend back up, and oil has hit a new all-time high since last week of $2,589.68 per ounce. You got silver at 32.51, but it hasn't hit that yet since the last surge. I think it was probably, let me see. Okay, so it was back here around May, the end of May, where we hit the all-time high for silver. So commodities like gold and oil are typically priced in dollars. When the dollar weakens, these commodities often rise in value because they become cheaper in other currencies. This could trigger a rally in commodities markets and related stocks such as energy and material sectors. I have mentioned to you as well about commodities, about oil, watching for oil to be on the rise once again and start breaking new highs that we haven't seen in a year and change, maybe 2 years. And who knows how high it could go. And then the effect that would have on oil stocks too as well. The oil stocks that I have mentioned in the past too, you can go back on the channel and find those stocks too as well. Gold stocks that run with gold and silver mining stocks, gold mining stocks. EXK, for example, which I've been looking at for some time. Also follows silver again, so you can take a look from here. So far, it's still looking like it's holding up pretty well. You just go back to the dollar index to show you how filthy that chart looks. All right. So what else? Inflationary pressures. This is pretty much the same list that I went over before, but we're going over it again. So inflationary pressures. A weaker dollar can lead to imported inflation as foreign goods become more expensive, and this could increase overall inflation in the United States, which could impact consumer spending and economic growth, as well as prompt potential action from the Federal Reserve. foreign investment in U.S. assets. So a weaker dollar can make U.S. stocks and bonds more attractive to foreign investors as their purchasing power increases. This could lead to an increased demand for U.S. assets, which could offset some downward pressure on U.S. markets. Maybe a big market correction is what they're probably saying. Emerging market benefits. So emerging markets often have debts denominated in U.S. dollars. So a weaker dollar makes it easier for these countries to service their debts, potentially leading to a stronger performance in emerging markets equities. And this could create a positive feedback loop for global growth and stability. And 6, potential Federal Reserve reaction. So if the dollar weakens significantly, listen to this, the Federal Reserve might be more cautious about cutting interest rates further, or might even consider raising rates to prevent inflation from spiraling out of control. Let me read this one more time. If the dollar weakens significantly, the Federal Reserve, just speculating, might be more cautious about cutting interest rates further, or might even consider raising rates to prevent inflation from spiraling out of control. This could have an immediate impact on stock and bonds markets as investors adjust their expectations. And what I mean as for adjusting their expectations, this could mean investors adjusting their portfolios, their positions, and getting out of specific, stocks, equities, to get into things like commodities, physical metal, or precious metals, and even maybe small cap stocks, that including meme stocks, in my opinion, to further hedge themselves for this potential scenario that could be very possible. And we are definitely feeling some of the effects as we speak. But if it gets worse, this could be the end result. So definitely keep a track on that. I still have it over here actually. So if you go back 7 days ago, let's see. So here, this was the same thing here. I asked what could be the result of the dollar index falling like it's doing right now. And if we go here, risk asset rotation. So investors might rotate out of traditional equities into alternative assets like precious metals or cryptocurrencies as a hedge against currency devaluation. If the dollar decides to actually collapse or devalue, and this could align interests in meme stocks or small cap stocks, heavily shorted stocks, who knows, as speculative assets might see renewed volatility and attention. So in short, also, DXY could support commodities and exports, but might signal challenges for certain sectors like financials, banks, because banks, financial stocks often benefit from higher interest rates, if you didn't know, and may face headwinds if the dollar continues to fall, especially if this prompts the Fed to halt or reverse tightening policies. And a weaker dollar could reduce bank profit margins if it signals a slowdown in rate hikes. So that is that is what I get so far here on ChatGPT, but definitely this is something to definitely look into and watch really closely as we're heading to Wednesday, where the Fed is planning to cut interest rates. As a matter of fact, look at that. I said I was gonna end the stream earlier. I'm still here. So let's go ahead and say interest rates on Twitter. Let's see what the top news is. So what do we have here? Really? So apparently, supposedly, allegedly, from what was being said this morning, is that Elizabeth Warren wrote a letter to Jerome Powell demanding a 75 basis points cut to interest rates. Hold on. And so this guy says that it is becoming obvious that cheap capital is going to flood the market, regardless of why or how it happens. Let's see. Interesting. So 23 hours ago by bar chart, says here Federal Reserve now likely to cut interest rates by 50 basis points at this week's FOMC meeting. Oh. Okay, I did not want to see that. Huh. AMLI lithium stock. Woo. Oh gosh. That would suck. It would be hella funny if he only did 25 basis points. Apparently, if Elizabeth Warren gets what she wishes, which I don't think it would be possible. I mean, that would, yeah, that wouldn't be necessary. That would not be the case at all. I don't think it would. American Lithium. Let me just check this out real quick. 37 cents. And you got the small players out here, fishy. Sheesh. Let's look at this real quick. Okay. Look at this. You got the flow here just coming back up. Throughout the year here, just slowly on the rise. And let me see, it looks like it's slowly establishing a bottom. You can see it right here on the verge of breaking over 40 cents. Look at the 4 hour real quick. Yeah, it's on that. It's close. Looks like it's right on the tipping point of breaking over 40 cents. Mind you, this market cap is only 80.71 million. Shares float 209 million. We got an analyst rating at a strong buy with a 1 year price target of $1.80 per share, which is almost a 400% move. What's going on here? So you got 40 cents on the horizon. Back then, this stock was worth, well, it was at a high of 150, but back then you had lithium here right around the end of January of 2023 at a price of $3.83. Then here, oof, he had lithium here at a price of $4.99 back in November 15 of 2021. It looks like winter time. Yeah, if you notice here, you got a couple of surges here. Well, that's summertime maybe, but mostly here winter time. Winter. Wintertime. Interesting. I wonder about this winter, huh? Hey, what the hell? That's weird. What is this? Hold on. Okay, here we go. I was wondering, I'm like, excuse me. Fishy, what you know about this? Fishy. Fishy. Weekly chart. It could either go two ways. You could either have a nice inverse head and shoulders. Shoulder, head, shoulder. And go for the uptrend here. From here. And head back over to 45 cents by the end of the week. If bullish. Fishy always got the bangers. Honestly, not financial advice. He does though. I'm not gonna lie, he does. Is there any gapparoonies to fill to the upside? That is the question. I don't see no gaps right now so far, but it definitely does look like it's wanting to do one of those. This little inverse head and shoulders. The MACD2 as well, if you notice, also had a nice break. So it looks like it's definitely climbing back up too. What are we looking at here? Short interest ratio of 4.37 days to cover. 2,200,000 shares available as of 3 days ago, and the cost to borrow is at almost 20%. Let's look at the hourly real quick. Looks like the volume isn't as much, you know, because you can see how the candles have been moving here. Lots of ups and downs, but stayed consistent and consolidating. But overall, the EMAs are acting pretty cool. I mean, just the trend overall looks pretty sharp. And how every other, you know, see how like it's trending over the 48-day period EMA. Got the 30 and the 13, and just close enough to get over the 200-day period EMA, which is at 38.69. So we're definitely looking for that break over 39 cents to then head back to 40 cents here. Is there any? Let's see. I was just scrolling down through my list and seeing it bottoming out. This could be one of those opportunities for you know, just for like a in and out for sure. If you notice here too, the radius trend, it was massively like trending bearishly, and now we're switching back up. Now we're bullish on the radius trend, so that could be a great sign. Also here on the MACD, on the hourly too as well, getting this trying to break back over and pushing back up for show. Let's see what we got on the 30-minute. Also doing the exact same thing. It's just lack of volume for sure, because we traded at 152.94 thousand today, and the average is usually 234.13 thousand. So it's quiet for now, but who knows if it gains more traction and then the volume starts to grow out of control, and then all of a sudden this stock is, you know. But I know lithium is overall growing and expanding, so it could definitely benefit from it. If it meets the requirements too for Nasdaq too, because it's under $1, so it's just one of the things that you also need to like be mindful of. So, you know, just be careful. Just be careful. Since you're here, just quickly, just giving a quick look at Applied Digital. This thing has been holding up pretty well around 580, 590, around that range for some time. You look at the daily, you know, it does look weak, and it's having a hard time trying to break back over $6. That's for sure. So, yeah, definitely keep an eye on that if you're still in that. Sportsman Warehouse has a nice oh my god. Sportsman Warehouse has an interesting little trend here that's happening right now. And this bird. The trend is growing from here. And we could get it. Could get another push up. If bullish, we could get a push back over $3. If not, 250 to 260. If it goes bearish. What about Hollow? Let's see what Hollow's doing. Dang, Hollow's back at 23 cents. Shoot. Oh, okay, so Hollow is actually now on an official trend going down. It did have a chance to create a double bottom at this point, but now during the past couple of trading days, it's now officially on a divergence, on a bearish divergence. Like it's stronger now, and you could see it here on the cross under. So that looks tough for sure. IVP too as well. IVP was the stock that Johnny was looking at before, and that looks the same thing as well. Wow, I said ting, where it's wow, it's literally. You believe this was at like $16 back in July 18. This was considered to be one massive P&D for sure. Massive. Let's look at what oil is doing right now. Looks like oil's in the green for now. Definitely that uptrend that I was talking about before, because it looks like it's rebounding back again. We're looking like crude oil is crossing on the MACD, about to converge, and we could be seeing crude oil hitting back over 72. If that's the case, we already know what to look forward to. And I'm still looking at INDO for a possible, entry right around this point. 250. Probably build a small position there, accumulate some shares, in my opinion. Not financial advice. Not to follow me on that, but it's something that I'm willing to test out, in that way. And because this also runs with crude oil in general. If oil begins to surge up 72, 74, 75 a barrel, I'm pretty sure that Indo is going to follow right through. You got HUSA too as well. HUSA is another one of those. IMP as well is one of those, but they usually deliver the barrels of oil. But I think I'm leaning more towards Indo and HUSA, because their charts are looking a lot more solidified, if that makes sense. Solidified, and I think it would definitely benefit from a big surge from crude oil, in my opinion. NFA. It also goes for other oil stocks, the big ones, Oxy, Exxon, and so forth. Let's see. Apparently, if let's say they decided to cut if they decided to cut 75 basis points on Wednesday, which would shock everybody, but highly will doubt it. Apparently that would have a positive sentiment, and a rate cut of this magnitude is generally seen as bullish, apparently, for stocks. So lower interest rates reduce borrowing costs for companies, making it cheaper to finance growth and investments, and this can lead to higher profitability, boosting stock prices. Growth stocks outperform sectors like technology, like chip stocks, Apple, Nvidia, Supermicro Computer, and so forth, which benefit from low borrowing costs and future growth potential, tending to perform well. Investors may see growth stocks that can capitalize on cheaper financing. And consumer-oriented sectors, lower rates make consumer credit, like mortgages, auto loans, more affordable, potentially boosting demand in housing, consumer discretionary, and retail sectors, which I really doubt. I really doubt that would actually change, because it's too freaking expensive. All of those things are too freaking expensive. Mortgages, auto loans, insurance, all of that stuff, housing, bond markets. So bond prices rise, yields fall. So when interest rates are cut, bond prices tend to rise, especially for long duration bonds. Yields on new
bond issuance would fall, making existing bonds with higher interest rates more valuable. However, this could pressure income-focused investors who rely on higher yields. Yield curve steepening. A large rate cut could steepen the yield curve if short-term rates fall more than long-term rates, and this is often viewed as a sign of economic recovery benefiting financial institutions like banks. Yeah, I really wouldn't see this happening at all. And if it's somebody like Elizabeth Warren, in my opinion, asking Jerome Powell for this, really writing a letter to demanding, I don't think you would get anywhere just demanding people something that is not even realistic at this point. You guys can agree with that. No. But what would be more interesting? What would be more interesting? Oh gosh. If it was the other way around, and they decided to hike rates and increase it. Oh my gosh. Yikes. Let's see. Weaker US dollar. So a sharp rate cut often leads to a depreciate. Yeah, real estate, it wouldn't make sense for real estate. Because the 75 basis points could drive mortgage rates down, making housing more affordable. Definitely not in this real estate market, for damn sure. Apparently, a sharp rate cut often leads to a depreciation of the US dollar, as lower rates make the currency less attractive to foreign investors. A weaker dollar can boost US exports by making them more competitively priced abroad, but it can also lead to higher import costs and inflation. Let's see, market expectations. So a 75 basis point cut signals that the Federal Reserve is aggressively trying to stimulate the economy, likely due to concerns about slowing growth or a looming recession. This could create optimism about the Fed's proactive stance, but if it's seen as an emergency measure, it might also spark concerns about underlying economic weakness. I don't think she's gonna get what she wants. Of course, I mean, it's her. Screw that. I just don't know. I don't know. For the outcome, for the doesn't work. What is the more realistic outcome? So here are the arguments, okay? Again, not financial advice, speculation. So arguments for a 25 basis point cut. The Federal Reserve has shown a tendency to act cautiously, especially when inflation is still above target. A smaller rate cut, such as a 25 basis points, would reflect a measured response to potential economic slowdowns without risking too much inflationary pressure. Recent inflation data. If inflation is moderating but still above target, a 25 basis points could help balance between supporting economic growth and keeping inflation under control. Previous Fed actions. So the Fed has been adjusting rates in smaller increments in recent years, suggesting that they may favor smaller, more gradual adjustments. Arguments for a 50 basis points cut. So you got number one, recession fears. So if there are more pronounced signs of a recession, such as a steep slowdown in consumer spending, which I believe that is the case, because you, for example, see, stores like BIG and a lot more retail stores seeing less and less more consumers spending. Revenues growing, it's dropping, and they're not making their numbers. The companies are failing to meet those numbers, those expectations, balance sheets, you name it. So that's a great example. Business investments or global demand says the Fed may opt for a larger 50 basis point cut to stimulate the economy. Global pressures. So if other central banks, for example ECB or the Bank of Japan, are cutting rates aggressively, the Fed may follow with a more substantial cut to prevent the US dollar from strengthening too much and harming exports. And 3, labor market concerns. So if the labor market begins to weaken significantly, the Fed may take stronger action to preempt a deeper downturn. So what if... Interesting. So what if, in speculation, the Fed decided to instead raise interest rates again by another 25 BPS? Isn't this interesting? Let's see. So, if the Federal Reserve decided to raise interest rates by another 25 basis points, it would likely have a number of significant implications for the markets and the broader economy. Stock markets, negative sentiment for equities. Stock markets would likely react negatively, particularly sectors that are sensitive to higher borrowing costs, like technology and real estate. Growth stocks, which rely on cheap credit for expansion, would be hit harder as their future earnings are discounted more steeply. Financials could benefit. Banks and financial institutions may see short-term gains as rising interest rates typically increase their net interest margins, which is the difference between what they pay in interest on deposits and what they earn from lending. Bond markets, so bond prices fall while yields rise. So a rate hike would push bond yields higher and bond prices lower, particularly affecting long-duration bonds. Investors would demand higher yields to compensate for the higher interest rate environment, making existing bonds less valuable. Increased borrowing costs, so corporations and governments would face higher borrowing costs, which could curb new investment and infrastructure spending. 3, inflation control. So tighter inflation control a rate hike suggests the Fed is focused on keeping inflation under control, potentially seeing current inflation levels as too high. Raising rates further would aim to cool demand in the economy, reducing inflationary pressures, particularly in areas like housing and consumer goods. Reduce consumer spending, which means higher interest rates would raise the cost of borrowing for consumers, particularly for mortgages, auto loans, and credit card debt, leading to a reduction in consumer spending, which could slow economic growth because people are stuck in debt and they cannot go out and spend their money because they are having a hard time paying off their debt and going through tough economic times, in my opinion, which is something that's really happening. Currency markets. So, go after that. Challenges for emerging markets. Potential for recession fears. Economic slowdown risk. Another rate hike could increase fears of an economic slowdown or even a recession, especially if the hike happens in an environment where growth is already weakening. Higher borrowing costs for businesses and consumers can reduce demand and investment, dragging down economic activity. So, Apparently, this post here, interest rates were supposed to be bearish for Bitcoin. Bitcoin reached an all-time high during one of the highest interest environments in decades. Now the story from the clowns is that rate cuts are coming and are bearish for Bitcoin. You can't literally make this up. Wow. What is the latest? Huh. Look at this. Since interest rates have dropped, refinancing could help you save and lower your monthly payments. Reach out now. Funny. Huh. Well then. Let's see, I think Goldman Sachs is onto something here. EM central banks are changing the game and it's not about interest rates anymore. Let's see. Fed funds futures have never been this uncertain about a rate decision as they are, at least since 2015. Three reasons Goldman Sachs sees gold to 2,700 per ounce by early 2025. Yikes. Oh wow. Look at this comment here. Oil could shoot up to $200 within the next 2 years as part of a super spike driven by poor growth in oil supplies, investment bank Goldman Sachs said in a research note back in May 6 of 2008. Wow. Woo. Oh, that's insane. Alright. I'm definitely gonna keep an eye on stock right now. Hold on. I'm about to right now. It's up there. Let's see. Huh. Let's see what this guy has to say. Hold on.
Right after that spring, all right, we have the current POI here is followed by a spike, right, in May, and then we have a consolidation period. This period lasts 120 days. What happens after that? We have a spring, right, and all of the POIs that we've had here prior, okay, but one is showing us that it has the same qualities. It has the spike, consolidation in 120 days, and then a spring. And right after that spring, right, from that positive POI, we have another positive POI. Okay, that is the correlation that we're looking at here. All right, we have the current POI here is followed by a spike, right, in May, and then we have a consolidation period. This period lasts 120 days. What
Over
happens after
100?
that? We have a spring, right, and all of the POIs that we've had here prior, okay, but one.
Okay. Interesting. Vortex numbers. It's not even that high. Yeah, okay. Apparently this guy, Big Mike, says that EMC is looking ready for a breakout. Was this on the 3-day chart? I never seen anybody chart it for a 3-day. Interesting. 3-day. Got a 2-day. Got a 2-day, but the 2-day looks a little bearish there. See how that candle looks like? Big push down. You even have the EMAs here curling back down too. Just starting to curl back down. Very interesting. Huh. I swear it just seems so managed. Oh, let's see. Wow. This could move down just a little bit more. Hmm. Huh. Hmm. Could it be a double bottom? This could be the case scenario. Hmm. That would be something else. Let me see something else here. Hmm. Hmm. Interesting. It's the weirdest thing I've ever seen. Alright, I'll take this out. What is this? October? No. Looks like this is just about that breaking point. Look at the 24-hour. The 4-hour. The 4-hour is giving us a radius bullish trend. What do we get over here? Oh. A bounce marker? Got a bounce marker here. Looks like it wants to try to move back up again. So it looks like. But it definitely had a sharp downturn right here. Nasty. MACD spreading out and looks like it could continue diverging to try to find the next bottom. Interesting. But in the 4-hour, the 13, the 30, and the 48. 13 rejected off the 200. I'm bringing this back down for sure. Good Lord. If this were to continue, especially with interest rates and everything like that, or if the markets get a negative impact from the interest rates, I want to say that the market overall would get brought down to as well, including AMC. In my opinion, I feel like that could be the case. Got a signal right here. Still looks like it's pretty deep, dark in the red. Look at GME real quick. And for some reason, GME, could be a continuation. Maybe a bear flag. And back down to 1990. Let's look at the price of GME at the moment. They close at 2009. Survey says we got 2016. Got 2016. Okay. 2016. So it moved up just a little tad bit. What if it's going for a reversal here? And try to move back up, maybe? That is the case scenario. Oh yeah. If you look deep into this, looks like it's trying to incline and follow. You get this curl up from here, then we could see some reversal action for GME. Let's look at the 15. 15 looks a little gnarly. Looks a little interesting there. But then again, the last 15-minute candle ended up a little short there. Interesting setups here. TJT still within that range from 17 to 18. Look at the 24-hour real quick. This is an interesting setup here for a DJT as well. For some reason,
For some reason, DJT looks quite interesting, to say the least, you know, in terms of some potential upside and maybe coming back over $18 before this week is over. We've already known that he's not selling his shares of the company. He's not going anywhere. He's not leaving. So this could be something to look at closely. Even the MACD here took a nice little bounce off that yellow line, which means that it's actually trying to rebound from here. Perhaps look for another potential bounce off this area of support, and then probably try to start to push up from here and officially call that the bottom, you know, because this was the bottom here from back in the end of 20 to 23. Looks like a whole new cycle ready to start from here and then all the other EMAs here will then eventually start to bottom out and turn back up and reverse. That'd be actually crazy. Definitely gotta keep an eye on DJT for sure. As a matter of fact, this will be the last thing to look at, and then I'm gonna end the stream. And let's see, 1720. Looks like it just came just a little bit down, but it's okay. All right, that is enough for tonight. We about to go to sleep. About to go to sleep. Yeah. All right, y'all. I am going to call it a night. I'm going to be back on Wednesday and stream on the night on Wednesday after the whole results for the interest rate cuts. Who knows what could happen? Could get a big surprise, and we'll see what's in store for everybody. And just wanted to say thank you to those who showed up to the stream tonight. Appreciate each and every one of you. For those that are lurking behind the screens and listening in, you know who you are. I know you're listening. Thank you as well. And much love to everybody. I wish you all the best this week. And please be careful. Please be safe. And trade responsibly. Know your limits. Know your risks. As long as you're making money, and that's what really matters. Know that this and everything else that was said on the stream was strictly non-financial advice. Strictly in our opinion and only for educational and entertainment purposes. So, much love to everybody. Again, hopefully everybody has a great night. Sleep well. Be refreshed for tomorrow. Wish you luck tomorrow. And I'll see you in the next stream, Wednesday, with yours truly, Line of All Trades on the Lion's Den. Thank you, and take care.